Hello, everybody. Welcome to the Ag Commodity Corner Plus podcast. This is week 71, and today is the 14th of August, 2026. It's just me doing the podcast this week. Mo's on crop tour, and the tour is halfway through. This week, we'll focus on the August WASDE Crop Report. It was WASDE week, and the report was friendly for the grains markets. We'll also look at some switches in the weather narrative as far as US Midwest is concerned. Let's, as we usually do, start with the weekly quote chart for the markets. And as you guys can see, the grains markets had a higher close. A lot of that owing to the friendly USDA August WASDE Crop Report. Also due to some of the switches in the weather narrative, and also continued geopolitical issues that seem to be supporting some of the grain commodities. Corn was up by about 20 cents, closing at 4.59. Soybeans higher as well, along with the products. Canola up by 39.1, closing at 818.9. Chicago and Kansas wheat higher, a lot owing to what's happening in the Black Sea region, and that is supporting wheat futures. So Chicago wheat up by 35 cents, closing at 6.75. Kansas wheat up by 40 cents, closing at 7.54. Minneapolis wheat was slightly lower. The livestock markets were also lower, hogs and cattle closing lower for the week. The stock markets had a buoyant week. S&P 500 hit a new record high. The Nasdaq was higher as well. A lot of that owing to some easing of the U.S. Inflationary fears, and we'll get into that shortly. And also strong earnings from the tech sector, which has been supporting the stock market. On the currency side of things, the Canadian dollar had a higher close, a lot owing to some easing in the US dollar index, and also due to a buoyant crude oil market. The Iran war is not really close to a peace deal, and that is supporting the crude oil market. Crude oil was up by about 4.99, closing at 82.3. Let's start with that August WASDE Crop Report, which was friendly, and a lot of that is owing to the reduction in the US 26-27 corn yield. So USDA cut the US corn yield from 183 last month to 180.7, and that was smaller than what trade was expecting as well, as you guys can see there. Also, USDA to offset, or rather more than offset, that reduction in the yield, they increased the harvested acreage from 87.434 to 88.592, which was more than what trade was expecting as well. But it was not so much of a surprise, the fact that they tinkered with the acreage numbers, because USDA does have a habit of adjusting those acreage figures in the August WASDE. They did that last year as well. Last year, owing to strong yields, the cumulative impact was bearish for the markets. This year, although the increase in harvested acreage more than offset the reduction in yields, and production went higher, stronger demand and a smaller beginning stocks figure led to a reduction in the 26-27 US corn ending stocks to 1.653 billion bushels from 1.79 last month. That was smaller than what trade was expecting as well. So on the whole, the report was supportive for corn futures. On the soybean side of things, USDA reduced the yield figure from 53 bushels per acre for the 26-27 US crop to 52.7, and that was smaller than what trade was expecting as well. Again, USDA increased the harvested acreage from 84.4 to 85.781, and that led to an increase in production. And bottom line, the 26-27 US soybean ending stocks increased from 0.31 billion bushels to 0.32 billion bushels this month. But as far as the futures are concerned, like I was saying, because it was a friendly report week, corn closed higher, as you guys can see there towards the right. Corn closed higher for the week, and it had a strong close today as well. And that was owing to some switch in the weather narrative for the U.S. Midwest. Soybeans closed higher for the week, but the move was more muted versus corn and wheat. Looking at the rest of the USDA crop report for the 26-27 global crop, USDA reduced the corn ending stocks figure for the global 26-27 crop to 274.66 million metric tons from 275.26. A lot of that, like I was saying, was owing to the smaller US crop, but also the EU corn crop seems to be shrinking by the week. And although the South American and the Ukraine crop may offset some of that, the net impact is a reduction in the global ending stocks figure for corn. For wheat, USDA increased the ending stocks from 272 to 273.25 this month. Soybeans, global ending stocks unchanged, largely unchanged for the 26-27 crop. Touching upon the South American production situation for the 25-26 cropping year, USDA did increase the corn crop from Brazil to 140 million metric tons from 138 million metric tons. And the Brazilian soybean crop was increased from 180 to 180.5. And for Argentina, not a lot of change for the corn crop. That remains at 63 million metric tons, whereas the soybean crop sees a slight cut from 50 million metric tons to 49.5. For the U.S. Wheat crop, USDA did reduce the all wheat production figure from 1.536 to 1.531 billion bushels, which was friendly. And the U.S. all wheat crop continues to be the smallest in the last 56 years. So the wheat market derived support from that and also from what was happening in the Black Sea region. Let's look at what weather has been doing for the U.S. Midwest crop. And earlier on in the week, or rather just after the USDA WASDE Crop Report release, on Thursday, the markets had a lower close, and a lot of that was owing to weather and the fact that heavy rains were expected for the U.S. Midwest and fell on many of those regions. But rain is good. The narrative of rain is good switched quickly to storms are bad, because it turned out to be too heavy in terms of precipitation for those regions that were in the path of the storms. And a lot of those regions were hit with high winds and hail, and flooding seems to be an issue for some of those regions. This is from Crop Profit and from X. They are pointing to the fact that a broad stretch of the central corn belt just recorded some of its wettest August 11th to 13th precipitation since 1981. Across parts of Iowa, Illinois, and Indiana, 3-day precip ranked near or above the 90th percentile or higher in some of those regions, and this is comparing to the data from 1981 to 2025. And severe weather was also active with widespread wind reports across Illinois, Indiana, Iowa, and hail reported in a lot of those regions as well. Several major corn-producing regions were directly in the path of the heaviest precipitation. So that led to a strong close in the grains markets today. And just to give you the closing, or rather the moves today, so corn was up by about 11 cents, soybeans also 11 cents, Chicago wheat up by 22 cents, Kansas wheat 33 cents. The winter wheats were supported by the grains complex strength and also continued issues in the Black Sea region where Russia and Ukraine are trading blows and hitting each other's ports and infrastructure facilities, which is creating more question marks for global supply of wheat and also trade from the region. Minneapolis wheat closed 9 cents higher, and the canola was up by 15.4. Sticking with weather, and this map here shows some of the intensity of those rains and the flooding. So the blue regions there, that point to about 10 inches of rain, and the 15 and the gray regions point to about 15 inches of rain. And all of that is pointing to some degradation in the crops in those regions. So quickly, the narrative, like I was saying, switched from rain is good to too much of rain is impacting the crops negatively. Also, this week, we had updates from private analysts as far as crop tours are concerned. And the DTN 2026 Digital Tour, they are estimating or projecting the U.S. crop yield at 178.5 bushels per acre versus the USDA's latest estimate at 180.7. For soybeans, they're pointing to 52.1 versus USDA at 52.7. And for some of those major production I states, the yield numbers are lower versus what they were projecting last year on their 2025 tour. And looking at the crop conditions update from USDA, especially focusing on North Dakota, which, like we highlighted last week, was one of the problem regions. That just seems to be getting worse. The corn conditions again dropped for North Dakota from 37% good to excellent to 27% as far as the latest report. And just to compare it to where we were at for the state, in mid-July, North Dakota corn conditions were closer to 70% good to excellent. That has dropped down to 27% as of the latest. Soybean conditions too are dropping for North Dakota. Also, guys, don't forget to try our program, try the app, join our marketing club. This week, as I was talking about, we focused on the August WASDE Crop Report and also looked at the game plan as far as crop producers and livestock producers are concerned going forward. So try our program and hope to see you guys in the marketing club. Let's spend some time on the wheat markets. And like I was saying, the winter wheats had a strong close. A lot of that is owing to the issues in the Black Sea region. And just to look at where we are at currently in terms of the winter wheat contracts. This is September Chicago SRW wheat futures, which closed sharply higher today and for the week. And Kansas wheat as well. In fact, Kansas was leading the market today owing to the issues in the Black Sea region. So midweek, there were reports of Ukraine hitting some of the Russian ports, and that will impact exports. And then there were attacks from the other side as well, Russia hitting Ukraine as well. All of that is leading to question marks over wheat exportability from the region. I spoke about the EU corn crop. The EU corn crop seems to be shrinking by the week. These are conditions for the French crop, which seems to be the worst impacted. As you guys can see, towards the earlier part of the cropping year, those conditions were closer to 85-90% good to excellent or good to very good, and that has dropped down to 29% good to very good. The German corn crop as well seems to have shrunk, or the estimates for production seems to have shrunk from from last year, and that's supposed to be 14% lower year on year. And the EU corn crop is expected to be the smallest in the last 3 decades, owing to hot and dry weather during the cropping season this year. These are European, this is a chart of the European futures, corn futures, and that has climbed by about, or rather more than 25% since mid-June, owing to the shrinking, the continually shrinking EU corn crop. Let's spend some time on the latest economic data from the EU, from the US rather. These are inflation numbers, or CPI and PPI numbers, as far as the US is concerned. US CPI increased 0.1% in July, putting the annual inflation rate at 3.4%. And this came in largely within trade expectations. And that reduces the expectation of USDA raising interest rates during their next FOMC in September. US wholesale inflation figures, the PPI numbers were flat in July compared to expectations of a 0.2% increase. Core PPI rose 0.2% below the expected 0.3%. So all in all, some easing of fears as far as price pressure is concerned for the US, and that should at least support the stock market going into the upcoming FOMC. Like I was saying, this is the US PPI chart, and that was largely flat. The Iran war does not seem to be nearing a peace deal, and that continues to be affecting the markets and affecting crude oil prices. The latest is that there's more rhetoric from both sides, and the war seems to be raging on. There was some rumors earlier on in the week that we could be nearing a peace deal, but that quickly died down. Finally, let's look at the latest update from CFTC as far as managed money positions are concerned. As you guys can see there, for corn, there was a reduction in the net length week on week, a lot owing to that conducive weather outlook, which seems to have flipped this week. And we should see some net buying in the grains markets once we have the updated numbers next week. For soybeans, net reduction in the net length by about 24,000 contracts to 101,362. In corn, like I was saying, they reduced it by over 15,000 contracts to 166,770. In the wheats, again, in the winter wheat contracts, there was net selling, so the SRW wheat net short position increased to minus 31,401. In HRW Kansas wheat, again they reduced the net length by over 5,000 contracts, taking the net length lower to 27,662. In canola, again, the net length was cut by over 12,000 contracts, taking it to 54,782. All of that should flip when we get the next report next week, and we should see net buying owing to the supportive August WASDE Crop Report, and also the switch in the weather narrative, plus the Black Sea region issues that is supporting wheat and the grains complex as well. This is the cumulative net position that continues to be there. You can see the circle region that continues to be significantly net long, albeit on the week-on-week basis. We saw some reduction, which again should flip towards the upside as we get the update next Friday. That is all I have for this week's podcast. Thank you for joining us for this podcast. and catch you guys next week. Hope you guys have a great weekend, and see you guys soon. Thanks. Bye.